Hello dear students, this topic Introduction to Financial Accounting. When we talk about financial accounting, it is a merger of two words. What are those two words? The two words are finance and accounts. So when we talk about financial accounting, let us first of all understand the definition, meaning of financial accounting. So when we talk about accounting, the American Institute of Certified Public Accountants says that accounting is the art of recording, classifying, summarizing in a significant manner and in terms of money, transactions, events which are in part at least of a financial character and interpreting the results thereof. This whole definition is a summary of what financial accounting is. To understand it clearly, let us stress upon each word of this definition. When we talk about accounting, we talk about recording of a data. We talk about classification of certain accounts. We talk about how to summarize the results of a particular company in a significant manner. We also say that whatever transactions are in terms of money will go to the books of accounts. It also says that you will summarize the transactions and events which will come in part of the financial character. And at the end, you go and interpret the results thereof. This is what accounting means for companies. Moving on, when we talk about what are the processes in accounting, or to be precise, what are the steps when you talk about accounting. So, the first and foremost step is you have to identify that whether a particular transaction is of a financial character or not. What does it mean? Suppose there is a quarrel amongst the managers in your office. Can you put it into the books of accounts? The answer is no. So, what will you put in the books of accounts? In books of accounts, only those transactions will be going which have certain relevant data in terms of money. So, the first thing that you will be doing will be you will identify that whether there is any financial nature in the data, in the transaction or not. Only then you will go to the next step, which is called as recording. Now, what is the meaning of the word recording? When we say the word recording, it stands for putting the transactions, means penning down the transactions in a particular book. What will you do when a transaction happens in a company? Suppose a company goes for buying a building, suppose a company goes for doing some sales. So, any kind of transaction of this nature will go to the books of accounts. And the step of putting the transactions in the books of accounts is called as recording. After you have done the recording of the transactions, you will go to the next step, which is called as classifying. Now, when you talk about classification, what does classification mean? Once you have identified the nature of the transactions, you have put those transactions as a record in the books of accounts, you will now classify the transactions. How do you classify a transaction? Dear students, you must have used a My 6 subject notebook ever. It means that you will put all the subjects in different colors of your notebook. Similarly, accounts goes. So, how do you put the things into accounts? You classify different type of accounts into one particular section. Now, those sections, when you put them into different segments, it is called as classification. How does classification helps an accountant? Classification will help an accountant to know one particular type of a account in only one segment. So, it is very easy for him to find out which account is lying where and where are the transactions of that particular account appearing. It becomes very easy for him to classify the transactions. Moving on, when you have classified your transactions after doing of the recording of those transactions, you will move on to summarizing. Now, what is the meaning of summarizing? As the name suggests, in the summary, you will put all those accounts which you have classified earlier in a particular statement. Putting those transactions, those accounts in a particular statement will help you to see a snapshot of the results of the company. These snapshots of the results of the company will tell you that where is the company standing at a particular point of time, and it will be very easy for you to summarize the transactions, the list of accounts that you had recorded and classified earlier. So, summarizing is a step which will help you to see the snapshot of recording and classifying. Moving on, when you have summarized the transactions and the accounts, you will go to the next step, which is called as the presentation of the data. Once you have summarized the transactions, you will go for a presentation. What is the meaning of presentation of data, transactions, accounts? You will basically put them into different formats which have been given under the Act Companies Act 2013. There are specific formats to show profit or loss of a company. There are specific formats to show assets or liabilities of a company. So, those formats will be used to present your data which you have recorded, classified, summarized in the earlier steps. So, after you go for the presentation of the data, you come to a step called as analysis. Now, when we talk about analysis of the data, the name itself suggests what will you do in the analysis of the data? You will basically make a comparison of what has happened earlier and what is going to happen in the next upcoming time period. Now, what is the purpose of doing analysis? Why will an accountant go for an analysis, or why will a manager go for an analysis of a data? The objective behind doing this analysis step will be that he would be interested to take future decisions based on any past mistakes done earlier, or he would like to improvise his strategies for the betterment of the business. So, this is what will be done in the analysis step. The next step after analysis will be interpretation. Now, when we talk about interpretation, the name itself suggests that you will be interpreting the analysis that you have done in the previous step. Suppose you made a comparison of profit of current year with the previous year. Making a comparison of profit of the current year with the previous year would help you to know that whether you have progressed in your business or you have gone down in your business. So, interpretation will help you to find out that based on the analysis that you have done earlier, whether your business is in a particular direction and whether as a manager you can do something to improvise it. So, dear students, this accounting cycle revolves around these particular steps. Once we have understood the steps, we will now go and understand that what is the purpose of financial accounting, or what are the uses of financial accounting. Why do we make these financial accounting statements, and what information do we get when we are making these financial accounting data? Basically, the purpose of this branch of accounting is to record the business transactions. As I said earlier also, that one of the foremost and important steps in the accounting cycle is recording of your accounting transactions. Therefore, the main purpose of the branch of accounting also goes as that you will be recording the business transactions in a systematic manner. Now, why do you record those transactions in a systematic manner? What is the purpose? You would like to ascertain that whether the company has made a profit or a loss. When you see that the company has made a profit or a loss, as a manager, you would like to take certain decisions for the future. Further, when you want to go as a next step, that what is the purpose or uses of financial accounting? As I said, one is that you will be wanting to know that whether there is a profit or a loss. The second aspect would be that you would like to know what is the financial position of the business. When we talk about financial position of the business, basically we refer to the assets and liabilities of the business. When we talk about assets and liabilities of the business, to classify and explain them, assets refer to the resources of a company, liabilities would be something that the company has to pay in the future. So, the basic purpose or use of financial accounting will be, number 1, to ascertain the profit or loss, number 2, to ascertain, to find out assets and liabilities, which is also called as ascertaining the financial position of the business. These information when prepared will help the management and several other interested parties from your company, from your business, to know the true position of the financial results of the company. Moving on to the next, that is, what is the need for accounting? As we just discussed that the purpose and use of accounting is twofold. The first one is that you want to know the profit or loss. The second one is that you wish to know that what are the assets and liabilities of the company. Next, if we talk about the need for accounting of the business, basically the managers, investors and internal groups would like to know only two important answers to their questions. What are those two important questions from the relevant stakeholders? Number 1, they would like to know how well did the organization perform. Number 2, they would like to know where does the organization stand. Now, explaining the first one, how well did the organization perform? How will you come to know that how has the organization performed? This answer to this question will come from profit or loss. So, the managers would like to know that whether the company has made a profit or loss out of the transactions which were held in the last financial year. And the second aspect which the manager would like to know will be that where is the organization standing today after one financial year. Now, standing today would mean that we want to know on a particular date what is the position of assets and liabilities. So, nutshell, if we talk about two questions and two relevant answers from managers, investors and internal groups point of view, the first question was how well did the organization perform? The second question was where does the organization stand? The answer to the first question will come from the profit and loss statement. The answer to the second question will come from the balance sheet of the company. So, need for accounting is like this. The next one is what are the functions and objectives of accounting? To make accounting, there is always a purpose, there are always some objectives, there are certain functions which the financial accounting performs, and these functions are in line with the stakeholders, are in line with the managers. So, the first function that accounting performs with its data set is to keep systematic records. What is the meaning of systematic record? The systematic record of a company would be in line with all the transactions which have been done in the past. For example, if we talk about a company called as Reliance, Reliance company would like to know, suppose, that what has been the transactions in the last financial year. The transactions in the financial year will be put into a systematic record setup, and that systematic record setup will help the managers and the other stakeholders to find out that these were the transactions which were held in the past and this is the output of those transactions of the past. So that is how the keeping of the systematic records happens. The second thing, which is the most important function of accounting, is to ascertain the operational profit or loss. Now, what is the meaning of operations of a company? When we talk about operations of a company, we refer to their business operations. For example, if I talk about an ice cream making factory, suppose we take an example of Vadilal Industries. What is Vadilal Industries into? It is into manufacturing of dairy, milk products like ice creams, etc. Now, the main business operations of Vadilal Industries is that it is producing ice creams and it is selling ice creams. So, the second point, the second function here relates to the business operational results and nothing else apart from operations. Whatever profit, whatever loss the company is doing from the business operations will be covered in the second function of accounting, meaning that the managers would like to know whether there was a profit or loss by selling of those ice creams, meaning the business operations. After the second function, let us come down to the third function, which is to ascertain the financial position of the business. Now, when we talk about financial position of the business, it means that we are referring to the balance of assets and liabilities of a company. Now, when I talk about assets and liabilities of a company, they are ascertained on a particular date of a financial year. So, we would like to know that whether the financial position of the business was a plus of a asset or a minus of a asset, a plus of a liability or a minus of a liability. Meaning that from this point we will come to know that assets and liabilities at a particular date were how much for a company. So, this is the third step, that is to ascertain the financial position of the business. Moving on to the next function, it says to facilitate rational decision making. All of the 3 points of functions objectives that we have discussed earlier are correlated with the last function that I am saying here. Meaning that when you talk about decision making, it is not just decision making, it is rational decision making. What is the meaning of rational decision making? Rational decision making would mean that in a particular situation, the manager wishes to take an appropriate decision based on the accounting results of the business. Suppose manager comes to know there has been ample purchase of inventory in the last year, but the sales were not in that tone, meaning that inventory is getting piled up but the sales are not happening. So, what should the manager do? On the basis of the accounting transactions, on the basis of the accounting results, manager will take certain decisions which will be rational decisions to improvise the sales position of the company. So, the fourth important function of accounting will help the managers to take rational decisions based on accounting data. After the functions and objectives of the accounting, let us move on to another important segment of our discussion, which is what are the users of accounting information. When I talk about users of the accounting information, we should remember that it is not just the internal users who will be using the accounting information, it will also be the people who are outside the company, outside the business, but they are still related to the business, they are still related to the company, and they will like to know what is the position of the company. Let us discuss the users of accounting information one by one. By discussing them one by one, we will try to take certain examples which will make it easier for you to understand. Dear students, the users of accounting information, the first one is management. Management is the center of any company. Why would management be interested in your accounting information? It is obvious that managers would always like to take a hold of situations. they would always like to control the business, they would always like to take strategic decisions to improvise the position of the business. That is why the managers will always be interested in your accounting information, and the purpose is they would like to control the business. The second person who would be interested in your accounting information would be the owners of the business, or we can also call him a proprietor if it is a case of a sole proprietorship. Dear students, from the perspective of companies, organizations, there are three forms as we know. The first one is sole proprietorship, the second one is partnership, and the third one is a company form. When we talk about owners here in this example, we are referring to a company form. In a company form, the owners and the management of the business will be different. Why so? Because the shareholders will be sitting at different corners of the country, but the managers will have certain office to manage the business. Now, the question arises, why is an owner interested in the accounting information? Why would he like to know that whether the company has made a profit or a loss? The owners of the business, those who have invested money in your company, would always like to know whether you made a profit or a loss. Why are they interested to know this? Because it is about their money, it is about their investment. They would always like to have a good return on their investments. So dear students, that is the basic reason why owners will be interested in your business, in your accounting information. The next person who would be interested in your accounting information would be the investors. Now, investors are also owners, of course, but when we talk about investors in a broad sense, investors could be the promoters, could be the founders, it could also be employees who are having the shares, who are having an investment in the company. So, by any means, if there is an investment in the company, the investor would like to know that whether there would be a good return in the business, whether the risk will be too high if they put the money in the business. Investors would also include, for the pursuit, potential investors. Now, what is the difference between an investor and a potential investor? When we say investor, investor will be those people who already have investments in your company. When we talk about potential investors would be the people who are wishing to invest in your company, but they still have to take a call, they still have to take a decision that whether they would like to invest or not. So, by seeing your accounting information, they would like to know that if they put the money into the company will give them desired returns or not. Only when they are satisfied with such an accounting information that they will be getting relevant profits, relevant returns from the company, they would go ahead and invest in the company. Next user who would be interested in your company would be creditors. Who are creditors? The word credit has made them creditors. So, when we talk about creditors, they will be the people to know their dues at a particular point of time. Why are they interested in our business? Because they are the people who have given us credit. Given us credit means they are the people who have allowed you time to make payments to them. So, when you get time for payment from them, the creditors become interested, when will you give them back? So, they are interested in their money, they are interested in their dues. That is why they would like to know the accounting information, and they would like to know whether their money is safe or not. So, they will be interested in the accounting information. Next person who will be interested in your company's information, in your accounting information, would be the employees of the company. Now, when we talk about employees, what is the pursuit of employees in the accounting information? Why would they like to know whether you made a profit or a loss? Employees would be interested in their expected bonuses, in their salary hikes, or any kind of hike that you are going to give them in the future. It is obvious that the company who is making losses is not in a good position, will not be able to give a positive to employees. The company who is in profits, is doing well, has got lot of projects, will only be able to give a salary hike to employees. The company who is doing well will be able to give them bonuses, will be able to give them certain expectations as per their requirements. So that is why the employees would be interested in the accounting information. If a company is going into profits, it is good for the employees. If a company is making losses, the bonuses, salary hikes would be at stake. So that is why the employees would be interested. Next is the government. Now, why the government is interested in your business? Why the government wants to see your results? The answer is simple. It is for the taxation purpose. It is the government who will be levying taxes on your company. And if it is the government who is levying taxes on your company, the government would definitely want to know that whether the company is going into profits or losses. So it is only a profitable company where the taxation will arise. So government will be interested in a company to understand the financial results through its accounting data. So these are the users of accounting information who will be interested in your accounting results, in your accounting data. Moving on to the next aspect, which is called as importance of accounting. Now when we talk about importance of accounting, it is certainly falling from that what is the purpose of accounting. We discussed earlier in this session that the purpose of accounting is twofold. Number one, to know the profit and loss. Number two, to know the financial position of the company. Now we are moving on and explaining that what are the details of importance of accounting and why are we making accounts basically. The first point here in the importance of accounting is that it is helpful to the management. Now, how is accounting information helpful to the management? The accounting information is helpful to the management in three ways. Number one, in planning. Number two, in decision making. Number three, in controlling. Now, when we talk about the planning, the decision making and the controlling, all of these three have their own meaning. For example, if I talk about planning, what kind of planning would management like to do? Will they like to see certain projects where they should put their money? Will they like to do some advertisement for promoting their sales? The answer is yes. For all these things, they would have to plan. Now, the next is in decision making. How does accounting helps the managers in decision making? Like we discussed earlier also, if there is any situation in which managers have to take rational decisions, it is with the help of accounting information that they will take these decisions. Hence, accounting data helps them to see the position of the company and thus take the rational decisions. The third one is in controlling. Now, what is the meaning of controlling? Let us take an example of a cost hike. Like we all know, in Corona times, there were problems with almost all the companies of the world, and everything went expensive because the availability was an issue. Now, how does accounting data help in such a kind of a situation? Managers know what is happening only through accounting data. Managers come to know the situation of the company only through accounting data, and with that accounting data, they are able to control the situations based on the information which comes from accounting field. Hence, for management, the accounting has got three-way importance. Number one, it helps in planning. Number two, it helps in decision making. Number three, it helps in controlling purposes. So dear students, this is the point which explains helpful to the management. The second point here is provides complete and systematic record. When we talk about recording, you can recall that in accounting cycle we had discussed that recording is one of the important steps in the accounting cycle. Now what happens with that step of recording is you obtain a systematic record of all the transactions which have happened before. Now because of those transactions and that systematic record, the complete record that you generate of the transactions will help you in certain manners. So that is one of the most important point of accounting, that it creates a systematic record for your business. And whenever you want to see that what is happening in the past, what are the transactions which have been done in the past, the recording of the entries, the recording of the data will help you to understand. The next point here is information regarding profit or loss. Now, we talk about profit, we talk about loss. There are only two things which accounting will be telling you, that whether the business has made a profit or the business has made a loss. So, one of the relevant points, one of the importance of accounting is that it will give you information related to whether you have made a profit or you have made a loss. So, it is one of the relevant information that you get from accounting, and based on this information you can take several decisions for the future. The next important point which you come to know from accounting is the financial position of the business. The accounting data will give you an information regarding assets and liabilities. It will tell you at a particular point of time whether your company is having assets more or liabilities more, and you would also come to know that what decisions need to be taken as regards to financial position of the company. Moving on to the next step, what is the other point of importance of accounting? It will help you to compare the different results. For example, if we talk about that what has happened to a particular company for the last 5 years, where will that information come from? That information will come from the accounting data itself. You will have a look at the last financial statements of the company, and for the last 5 years of those statements of the company, you will come to know on a comparative basis year on year that whether the profit was more last year or it was more last to last year, or 5 years before the company was in a better position and now company needs to do certain strategic decisions to improvise the future. So, a comparison can be made from the previous year's data to take relevant decisions for today. So, this is how you can compare your accounting data based on the information provided to you by accounting. Next is that it will also become an evidence in legal matters. How? Suppose you entered into a transaction of sale with a person, and that person promised you to pay after 3 months of time. Now, if you don't get a payment after 3 months of time from that person to whom you had made the sale, you will have evidence only and only from the accounting data that you had made a sale to this person 3 months ago and the amount is due 3 months after. And if you do not record this transaction, if you do not put it into books of accounts, you will have no proof of the transaction which was done, and the other person can definitely say that I will not make the payment to you. So, it is only with evidence that you can ask the person that you have to make a payment to us, and in the legal matters you can show your accounting data, your accounting information to have benefits from the situations. So, that is how accounting information acts as an evidence in your legal matters. The next point is it will also help the company to raise loans. How does this help to raise loans? What is the meaning of raising a loan? First of all, let us understand what a bank loan is. A bank loan is basically a long term liability if you are going to take a loan, let's say for 10 years. Suppose you are going to take a loan of 10 years from HDFC Bank. And if you are taking a loan of 10 years for HDFC Bank, this is going to be a long term liability for your business. But how does it help you to take a loan? How does accounting information helps you to take a loan? The bankers will ask for certain relevant data. They will ask for a position that how your company is performing in the last 5 years, 10 years. Bankers will be interested to know that whether you will be able to make a payment to them in the future or not. And it is only when they get a confidence by looking at your accounting data, they will approve a loan for you. Approving a loan means that you will get funds from the bank, getting funds from the bank will help you to raise funds very easily. One of the source of funds for companies is bank loans, for which you require relevant accounting data, or maybe bankers can ask for your statements also. So producing the statements in a systematic way will certainly help you to get an easy loan from the bank. So in this class we had this much to discuss. We have covered the meaning of accounting, we have covered the financial position and profit and loss meaning, we have covered the importance of accounting, we have covered purpose and uses of accounting. In the next class we will continue with certain accounting parameters and certain terminologies. Thank you.